So right now, you can see right now I'm in position. As I was saying, I'm in position. Okay, you see, I actually entered, and the trade is actually going partially against me because I was not looking at the chart. I just entered blindly. Okay, but nevertheless, I know the market will still go back up. Understand? The market is trading below my entry point. Now, once you are in position, this is what it shows you. It shows you. It shows you. You can see. It shows you. Um, like for example, I'm using the cross now. Understand? But do not use the cross, please, or use that isolated. It's very, very important. Understand? It's because I know what I'm doing. That is why I'm relaxed. Understand? If I'm not relaxed, if I don't know what I'm doing, I won't be relaxed. Forget the fact that I'm seeing. If you see the example I was talking about, the market will cross over and start hitting my balance. You will see it here. If the market eventually pumps and gets above this current price, you see the market will start reacting, and we start seeing some positive, some negative money. That means what you're seeing minus 1.15. It simply means I'm losing 1.15 of my particular money. Okay, what this simply means is that I'm losing 1.15 of my. Yes, simply means I'm losing 1.15 of my particular of my margin, of my money. If this price, you can see, is getting to even 1.30, 1.15. If it gets to 4 point, I won't be taking out. I would, the money, this particular, if it gets to, this is margin. The margin simply means I use $4. Remember, I use $4 to enter this trade. If it gets to $4, my money here will it has already exhausted what I entered with. It will now sweep to my balance here and start eating from it, because I'm using what, this cross margin I spoke about earlier. Okay, that is why it's advisable you use the isolated. This one I use the cross because I just entered without looking, but I know what I'm doing, so I'm not worried. I'm seeing the market. Understand? Right now, if you look at this position is a very, very powerful place where you need to understand so many things here. Position, if you look at the position from this angle, you have the hidden and other pairs. We have close or position. Close or simply means you are closing the trade. You don't want to be in this trade again. Okay, you don't want to be in this trade, and you now be like, okay, let me close the whole trade. This is where you now say, okay, you close. Like for example, let me use this one. Sorry, let me use this one. The trade is actually going better than expected. Fine, but we know what we are doing. Now close. Look at the close tap from here. This downside. The close after the adjust leverage, stop profits and loss, close position. Maybe you feel this market you're already in loss, and maybe I feel now I'm in loss. I don't want to continue this trade. I just want to accept this $1.64 loss. I will just come here, close position. You now be like, if you look at it now, we have the market price, and if we tap on this market, we have what they call limit. Limit price simply means you is more of a setting a stop loss. If you tap on the stop loss, for example, you are now be like, okay, I don't want. If the market ever gets to now, the currently let's go back first. Let me go back and explain something. Currently, the market is trading at 0.1357, and I still having a strong belief that this market might get to maybe 1397, 1398, but for now it's around 57 for one or two reasons. But I feel I don't want to experience more losses than what I'm seeing now. Currently, look at that now, I'm seeing almost 1.98. I'm actually using my money to really do this margin to explain this. I'm in loss for real time loss though to explain this. So I don't want this loss to be more than this. I can now come to this close position, and market means if you tap on market and you press OK, you are selling at any current price. That means any current losses here at the current price, that is where you are selling it off the market and accept your loss and go off. Okay, but if you put limit, now the market is trading what, 1360, abi? Fine. I don't want to
I don't want, if the market maybe 1 or 2 reasons, maybe the market is going a little bit more bad than expect, I put limit. I can change it to as okay, if the market gets to 1320, that means look at the down part, position amount, estimated PNL is loss minus. That means I will lose -$8 from this trade if the market ever gets to 1320. That is what I'm able to lose. That is why this is more of like a stop loss in your futures. I can press confirm. Oh my God. I'm not supposed to press that, sorry. I lost like $1 plus now because of this, I was not supposed to press that, sorry. But that is where you can set it, okay? I actually lost a few bucks because of this training, because of this. Now I have to go in again just for this, just for me to explain. Let me use a very tiny amount so that I won't be feeling $1 is money. $1 is money. Let me use something like this. Okay. And let me use $1.29. Let me use the same cross, but please use this thing. Now I'm back in position. Okay. Now we have the $1 margin. Now what do we do now? Okay. Now we have the after. Now I've actually tried to explain what this thing is all about. Now you can see it's showing green now. Green simply means okay, the market is coming to my favor now. You can see the green. Before it was red. I actually had to close it mistakenly. This is the first method. I made mistake of confirming, using this to confirm. This is to close your trade. I don't want, like I closed my trade that time that it went off. That is, I want to accept the loss and I want to go off. I want to leave the place. That is the loss. But I want to ask, as I was making mention of stop loss. This is where we use for stop loss, stop profit, stop loss. If you tap on it, we have market price, last price. Now, if you look at this place, we have entry price. If the entry price is 0. Remember my entry price for this particular, the entry price for this particular trade is, look at this place here, or just open close to the cross. We have the entry price, we have the size. Entry price, that's the price I entered, is 1362. Now the market is at what? If we come up here, it's around 1366. That is why you are seeing this green here. I'm making some little profit. Okay. Now, I want to change. There are two ways of adding stop loss to this trade and take profit. Maybe I felt this market will go up. Look at this TP/SL just below that entry. Tap on it. Now, this is what comes up. It shows you take profit and stop loss. Now, this helps you to take profit automatically when you are not there or you went out. Okay. Now you be like, okay, I want to take profit. My entry price was 361. Now 0.1361, but I want to take profit at 1395. If I'm taking profit at 1395, look at the profit here. When mark price reaches 0.19.5, it will trigger take profit, market order will close in position. Estimated PNL, profit and loss, will be at 1 point, which is green, 1.28. I hope you get. Now, if I want to set my stop loss, I have to maybe go below what I bought, which is this entry at the top here, at this top here, and I'll be like, okay, if a peradventure like I did previously, I just accepted that loss, and the market goes against me, I have to accept this loss. Let me say I'm using 0.13. Let me use 1320. Simply means I will be making. Look at the statement down here. When mark price reaches 0.1320, it will trigger stop market order to close this position. Estimated PNL will be 1.63. Okay, can you see? So now if I should confirm this, look at what will happen. Successful, good. It will create two orders for me for my order book. One would be to take profit, one would be to stop my loss. If the market from this, the current market now is 13.66, I'm at loss, I'm in profit now. If you go to my position here, you are still, I'm still in profit. It's still showing green, I'm still in profit. If this market from 13.66, which I look at the entry, look at the mark price means the current price in the market, 0.1366 gets to 13.995, I will take that profit of 1 point of that profit of this profit, that profit I showed you in that this thing of 13 of 1 point something I showed on that top take profit then. Understand? But if the reverse happens, then I will accept also the loss of 1 point something 1 point that was is 1 point 30 something dollars I saw there. Understand? 1.30 something $30 or so. Understand? So that is it. This helps you control. These two orders helps you. So just in between the market, you can see the market is even moving. It's still moving in my favor. It's still moving in my favor despite despite the current loss I just lost. So if maybe I had added some little money to it, I would have been making some good amount of money. You can see it's still moving. If you want to do this, you want to maybe know there's what we, or there's also, if you look at this CHR down here, CHR perpetual close to the RICS 0.82. Look at the top, there's a box there. If you tap on it, you see stuff like this. If you tap on it to show you, I'm actually making currently I'm making 25% of $1. If you do the mathematics, you see it yourself. 25% of $1 is that is around 0 point something. So now liquidation. Look at the liquidation price. You can see it's because I'm using a very tiny amount. That is why it's not actually showing. If I'm using that this thing, if you check the previous video, you see a liquidation. That previous video before when I lost that trade, you see there was a liquidation price of 0 point something. Understand? Look at it. 0.9. Go back and check. You see 0.9 something. Now the current price is 0.1370, right? Let me go back to that previous trade. Let me go back to the chart to see that liquidation price. This is the. Let me go to the chart. Let me just open the chart. Okay. Good. Let me just quickly use and show something. Good. Now this is the market for that same pair. Okay, sorry. CHR. This is the pair for CHR. Yes, good. You can see this is the market. Remember, follow this arrow, please. Remember, I bought at this price here. This price, this where the four corner is. This price here, I'm rotating around. I bought at this price that I'm now in profit around this point here. The current market is. But if for one thing or the other, anything goes wrong, if the market moves down, and gets to this 0.96 something around this place here, around this zone, around, let me draw it here. Let me draw that. Let me draw that thing. If the market gets to around this point here, look at it here, around this 0.9 something here. If the market drop to this particular place, that is my liquidation price, I will lose my entire money. That is why you need to know, you need some, at least some fair knowledge about how the chart works. But from this point, because I'm looking at the chart now, I'm feeling the price will always go up, even higher and higher, maybe to this point here, maybe to this point. You can see. So I'm just trying to, what I'm trying to do now is just to explain how all this works. Okay, how all these things work. So how it works right now, I'm just trying to see how these things works. Understand? Maybe I will allow you watch these particular videos and ask me some question. Maybe I feel maybe I'm just over teaching what I'm teaching currently. I will come back and then explain some basic things needed. Understand? But for now, I think these are some of the basic things you need to know as regard trading futures, using your stop loss, entry, and then exit. Like I told you, it's not spot. If you are using short, means you are selling off. You are selling. If you are selling, you are making profit. If you are buying, you are also making profit. Understand? So that is it. Maybe for now, the market is still pumping. It's getting to 13.75. Maybe when it gets to a better price, I might just come back. But for now, I think I will have to pause here and see how you relate with this or you understand this, and maybe you ask any possible question. I will get back to you as well too. Thank you very much.